All right, we are just getting ready for the show to get on the road here. Um, Welcome, everybody. Today we have a special guest that I've been very excited for, Luis, who I've actually been following for quite a while, probably around a year and a half, 2 years, ever since his early posts and blogs about stablecoins and DeFi in kind of the developing world. And I think he has a really calm, cool-headedness when it comes to adoption. So I wanted to feature him this week. We were going to talk about something that he was managing. He was doing some LP experiments on. Oops. Looks like we got disconnected there for a second. Okay. All right, good. We are back. So what I was saying, we were going to talk about some things that he was working on the LPing side. I think what's quite interesting today is we've just had this extreme market, let's call it an adjustment. And so maybe we'll briefly touch up on that. So really excited to bring on my guest today, Luis. Hey, Luis, how's it going?
Hey man, how are you? Nice to finally be able to do this.
Yeah. Thank you so much for your time, man. And it looks like you
I'm
got
wearing
great
a
weather. McDonald's hat, you're ready. You're ready to go back. That's hilarious. That's hilarious. How are you doing today?
pretty good. I mean, well, okay, I don't mean to misspeak. I'm doing all right. I guess the market itself is not doing wonderfully. But I think that actually, so I might show you where I am. So I actually kind of made sure that I'm not in front of a market screen or a price chart today. I'm
Oh,
trying to, I'm doing my
touch
best
grass.
to, just disconnect a little bit. Yeah, touch grass, as they say.
Mhm.
Because sometimes, the market just does stuff that you really try to kind of manage that risk. Sometimes it just doesn't work out that way. So I'm just trying to kind of give myself an afternoon to reset. I mean, that being said, I'm very happy to talk to you guys about all of this stuff and all of the stuff I've learned recently. And I'm actually
Mhm.
completely all right. Also, if you want to dive into kind of some of the details of the liquidity pool farming stuff that I've been writing about, I
Mhm.
actually still kind of believe that that's a pretty good move for kind of well, if in any situation that is kind of within the realms of what you would normally expect from a normal market, it is all right. I think it's black swan
Yeah.
events like what happened this weekend where suddenly it calls into question everything, doesn't it?
Yeah. I'm really excited to dive into that. I think this audience is mostly liquidity providers on Solana, and they're quite keen to be. They're not exactly the super risk on meme coin traders, but people in the audience are people that want to make a living doing crypto. So I'm really happy that you could take the time to join us because a lot of your writings was pretty much about that. Can you give our audience kind of a background introduction of who you are, what your
Mhm.
story is? This is
Sure.
quite
Yeah.
interesting.
So yeah. So I've been in the crypto world since 2014. We just called it the Bitcoin world back then because there wasn't really anything else that you could trade. So I've been building businesses here in the Philippines, specifically around the exchange industry, for about 11 years now. And currently I am leading we call this the G Crypto app inside GCash. So GCash is the largest fintech here in the Philippines. We have about 95 million customers. And of those 95 million customers, about 4 million of them are crypto users as a result of the app that I've been working on for the last 2 years now. So my whole career has been about crypto advocacy and kind of bringing as many of the Filipino population to crypto for the first time, and try to educate them so that they understand what they're getting into, but also kind of give them access to, at the very least, things like Bitcoin, Ethereum, Solana. Doesn't have to be super fancy, and I certainly don't advocate that they start investing in the memes and stuff like that. But like, to me, it's just give them access first and kind of show them the ropes, and then like kind of progress from there. That's been my entire career, just kind of figuring out how to keep pushing and pushing and getting more people to become aware of this stuff. But on a personal level, I would say that I'm a relatively degenerate degen. Like I do play around with as many of the tools as I possibly can, and specifically the whole LP thing. I've been doing that for a little over a year now, and that's kind of how I think we first started interacting. Right? I mean, it was because of I started writing this diary about LP farming, where the majority of the stuff that I was doing was on Orca. So I guess that's pretty, kind of very much in the Solana ecosystem. I've played around with some of the other exchanges also, although most of my familiarity is with Orca and kind of that area.
Mm-hmm. I'm curious as to like what got you into LPing. How did you hear about it, and what kind of gave you that aha moment to start doing it and write that journal?
Mm-hmm. Oh well, so I generally don't start writing about stuff until I have some general idea that there's some real potential there. So like I'd been already doing all sorts of different LP positions in various other chains for about maybe 6 to 9 months before I even started writing about the Orca experience. The reason why I started doing the Orca experience was because I had a level of confidence already at that point that I knew that it wasn't just a straight up like an experiment where I had no idea what I was doing. I knew that I at least knew how I understood how rebalancing worked. I understood what the potential losses and gains might be, and I understood kind of what the risks were, such that if I started writing about it, then I could really just be kind of sharing with other people with some degree of confidence that that this was something that they could look into also. I don't have a huge following on Twitter, but on Facebook I have about like maybe almost 80,000 followers, and when I write about stuff there, people do tend to kind of want to try to play around and learn it also. So I wanted to be relatively confident that the thing that I was going to be teaching was something that could potentially make gains for people. I didn't want to just like talk about it and then okay, whatever, guys, do your own research. Like that's not really a great way to go about things. And generally speaking, the Orca experience has been great. Like I'm sorry, it's not specific to Orca. The LP farming experience has been pretty great. It allows me to kind of squeeze a little bit more value out of the coins that I already believe in anyway. And kind of take advantage of the fact that I do want to support the DEX ecosystem, because I really feel like kind of moving forward, I want as much of the volume to go to the decentralized exchanges as possible, and that's kind of so me. That's a slightly political kind of mindset, but that's part of the reason why I'm doing it.
How current of you? How currently relevant of you? I went through the diary a bit, and that was quite interesting. What would you say are kind of like the big takeaways from that experience?
Sure. Oh, God, so many, right? And the thing about LP farming is that it's quite hard to come up with anything. Like you can't do like I'll give you 5 tips and then you'll do really well as an LP farmer. It's not the kind of thing you can kind of boil down to just some small tips and tricks and stuff. The reason for that is because it is somewhat like trading itself. It is, it's not exactly as hard as day trading. I find that day trading is just exhausting because you're constantly looking at charts all the time, and you've got to constantly be reassessing things like stop losses and and take profit points and all of those things, right? You don't necessarily have to do that much decision making when it comes to LP farming, but having some familiarity with the market and having a certain amount of confidence that, you know, when if the price is dipping, you don't necessarily have to rebalance immediately. You kind of there's a certain amount of mental discipline that is also very important. So kind of there are emotional parts of it that are quite similar to being a good trader, being a good day trader or swing trader or whatever you want to call it. But at the same time, it is kind of toned down. Like the kind of risk that you are opening yourself up to are I would argue are much less than with day trading, because with LP farming, the impact on you, on your position, on your kind of dollar value position, is somewhat muted because of the way that you're kind of spread out across a particular range. Some of this stuff is details that I think only other LP farmers might understand, but you know, the way that you could earn money from LP farming is slower and more consistent and more deliberate than it would be if you were day trading. You actually have to actively kind of make decisions on a hourly, daily basis when you're trading. Whereas an LP farmer, you know, you make a couple of decisions every week. That's kind of it, right? You most of the time you just kind of sit there actively, kind of or passively just kind of harvesting yield. Of course, that is during those times when the market is kind of relatively predictable, it's so easy, right? I mean, I could go on vacation and not have to think about it. But yeah, during a bad market weekend like this one, maybe not so much, right? There is some active thinking that is involved. But I guess I like it because you can kind of coast for a pretty long time when the market is not going nuts.
Mm-hmm. And what were kind of the results of this LP farming experience for you? You've done it, I think, for 6 weeks or 8 weeks.
So it's now 2.5 months. 2.5 months. Okay.
Okay.
So pretty good, right? Like 10 weeks. 10 weeks, yeah. So I think I was looking at so I'll give you guys the numbers. I'm gonna be pretty precise about it because I was publishing the exact numbers that I was doing. So I had a total position of about $140,000. And by the 10th week, I had about $14,000 in yield from that. So, you know, kind of, if you wanted to do like, 10%, right? So like roughly 1% per week on average. There was at least 1 week out of that where I was earning nothing because the price had slipped out of range and I didn't want to rebalance. So actually, it was more like 9 weeks of real yield, and that's pretty average. I've definitely seen people who have done better than that. Like, it's all right. So that's the main thing, right? It's definitely okay because the 10%. If you annualize that implies that I'm actually doing something like 50% per year. It's again pretty good, right? But there are definitely LP farmers who are a lot more aggressive than me, who would be probably hitting maybe double of that if they are willing to take, you know, a lot more risk. And I think where I am now, as a more mature crypto person, like I'd rather be able to sleep properly at night, I think. So kind of my my priorities are more like mental health now. Mental health, physical health, and stuff like that. And if I can get away with 50% per year and sleep 7-8 hours a night, I consider that like a massive win. That is such a big win for me.
50% is already insane to be kind of the savings account type of person.
Oh, for sure. Right.
Yeah, they cannot fathom like that level. Have you already incorporated, because I think you were doing Sol USDC positions, was it on Orca?
Yes.
Okay.
Yeah.
So
yep.
in a time like today, I would
Yes,
imagine that that sold position would be kind of
out of
underwater.
range. Yeah, correct. So this is one of those times where we are out of range and we're not going to do anything. We're just going to sit and we're going to wait. We don't really have a
Oh,
choice
okay.
with this one because it is too large a drop for me to want to rebalance. Because if you rebalance at this point, then you are taking quite a large loss, and I'd rather not do that. I'd rather just pause the earnings. So this is kind of the thing where I think the mental discipline is most apparent because a lot of traders will usually tell you sometimes the best trade is to do nothing, right? Just don't make a move. Because if there's too much uncertainty in the market, all you're doing is flipping a coin. And why would you flip a coin on, the capital that you are supposed to be holding quite dear? So in my case, I don't want to make a move because I don't want to take any further losses. Right now, it's all unrealized losses. So I'm just gonna stay. I'm just gonna wait until the market starts recovering. I will probably rethink this by Monday to see. Like you know how the market. When the U.S. market starts waking up, right? You have to start thinking about like, okay, how do I interpret what just happened to the S&P, for example? I don't know. We'll see, right? We'll make up our minds then. But my general sentiment is that the US and China have sorted out their tariff stuff in the past, and there is no reason to believe that they wouldn't sort something out again, given enough pain. And there's quite a lot of pain. We generated a lot of pain this weekend, so I'm
Okay.
optimistic that the I'm optimistic that we will see a recovery. Now, that being said, don't know how long it's going to take, but uh, the largeness of the drop in the price kind of warrants patience. I think we need to be a little bit more patient. Uh, so that's kind of how I'm gonna handle it. I think I'll just kind of sit and wait and do nothing, and then as if it keeps going on for a very long time, then I'll start rethinking it. But for now, I think it's safer to just kind of wait. Um, there is
Mhm.
one learning that I wanted to kind of just share with you guys. That might be relevant for when the market comes back, right? Um, the reason why I'm now kind of a lot more underwater than I should have been is because I used to have a much more diverse LP, but now it's just mostly Sol USDC. It used to
Mhm.
be that I had a Bitcoin ETH LP also. That was about
Mm.
30, maybe almost 40% of my position was in that one BTC ETH pool. So this was not on Solana. It was on Aerodrome on Base, because that was
Mm.
kind of the highest daily volume, I think, for that particular pair. So that's why I put it there. Um, if I had retained that position instead of like turning everything into Solana USDC, I think I would have been slightly better off because Bitcoin did not drop as much. And I think Ethereum
Mhm.
also did not drop as much, although it did drop by quite a bit, right? It was just slightly less. Whereas Solana kind of, it really kind of, it took a nosedive.
Substantial.
Uh, yeah, it was pretty substantial, right? So it would not have saved me in the sense that my total portfolio value would have still sucked, but it would have sucked a little bit less, I think, if I had
Mm.
if I had retained the Bitcoin Ethereum LP. So I might go back to that strategy when the market has had a little bit more time to recover. I don't want to do it just yet because
You can't.
again, you would be realizing
Yeah.
some losses if you did it, right? So but I might go back to that when we are in the $220 price level for Solana. I mean, when we're back kind of in that range, then I might kind of redistribute some of my funds so that it's a little bit more protected for stuff like this. Although, to be fair, man, everything dropped, right? So all I would have done would have been to kind of reduce the losses, I think.
It seems like the crypto markets are now perfectly correlated with mainstream TradFi markets as well. So there was a time where Bitcoin was inverse. S&P, which was cool because
Yeah.
it was like an
Yeah.
uncorrelated asset on the side. But now there's just too much, I guess, institutional capital in all of this, for good or for worse.
Yeah. Yeah. I mean, I kind of wish that it was not the case. Actually, so a couple of things that I guess if you were looking at the markets this morning, so PAX G, or I'll just say gold, right? So gold held strong this weekend. It's still above around $4,000. And then the other thing that weirdly held strong was BNB, right? I was like, what the hell? So don't really know what to make of that, but yeah. So those were my only two assets, PAX G and BNB, that kind of held their price levels roughly. The gold one, I don't really know what to make of that. Like, I don't know why in the world the stock market was rallying at the same time the gold market was rallying, but I guess that's the world we live in now.
Yeah, I don't know too much about that.
Yeah,
it does seem like maybe from a portfolio perspective, having more diversified assets, usually better than not. But I wonder, like, you made the choice to hop over and concentrate into Sol USDC. Was that coming from why did you go make that decision?
Okay, so I mean, I can be very critical of myself because it's just me, right? So I'll just be super honest. I think it was just I got greedy. Yeah, I got greedy. I got too greedy. I knew that I would be doubling my daily revenue if I kind of shifted the more capital to Sol USDC. So the reason why BTC ETH was not, it's strong in the sense that, kind of those are two very good assets, but like in terms of how much you would actually earn on a daily basis, it's actually quite weak. I think I was hitting something like maybe 12-15% per annum on the BTC ETH pair. So it's certainly okay if you were comparing it to like a traditional savings thing. 12-15%, that's fine, right? That's great. Plus, it's mostly Bitcoin or Ethereum. Those are nice assets to hold. But it doesn't hold a candle to like Sol USDC on Orca because of like just how much volume there is on that pair. So that's kind of why I did it, right? And I guess what's interesting now is that I can confidently say that was not the right choice because of kind of what happened. So that just means so what happens, right? So okay, what do I do now? Well, it just means that I have a much higher hill to climb in terms of like getting back to my original, call it, dollar value. Yeah, so that's it. It's not like I got liquidated or anything. It's more like I just need to wait a little bit longer, and the market has to be really on my side a little bit longer in order for us to recover.
Yeah, now is a good time to be buying discounted Sol, and then I guess you'll be the one selling it to us.
Oh my gosh.
So,
yeah.
I wanted to get into kind of so this one thing that you mentioned, right? It's basically portfolio diversification. If we had somehow gone into a BNB position, I think all of us would be chilling, right? So this seems like, just normal portfolio theory, having different assets is a good idea. Other things, like I'm sure everyone's kind of bleeding right now, so people are just like thinking, okay, how do I stop this from happening next? Lewis, can you tell us it's going to go back to 220 tomorrow? Those things. So the thing that we were talking about in chat was hedging, right?
Yes.
And even in hedging, I don't know if you read into it, the ADL, the auto deleveraging, that is like the big keyword of the day. What is ADL? Oh my God, ADL is crushing us. Sexes are horrible, or whatever.
Right.
Hyperliquid is not safe either. What do we do now?
Right.
So hedging, in theory, is a good protection against this, right?
Yes.
Short Sol while opening
Yes.
a Sol USDC, right?
Yes.
On Sol USDC
Yes.
LP, you are essentially long Sol because you're accumulating Sol. And so to delta neutral, to neutralize that position in case Sol goes down, we short Sol. But if we do short Sol, we might get now ADL'd. Have you looked into that? What are your thoughts about that?
Yeah. So actually, so a while ago, like maybe like late last year, I was kind of experimenting with this on Ethereum because my first few LP experiments were ETH USDC. And what I was trying to do was I was short Ethereum on a centralized exchange, and it was a leverage short, right? So because the thing is, you don't want to be like 1:1 because like perfect delta neutrality isn't even really possible because your ETH position in a liquidity pool is not static, right? The amount of ETH that's actually in there is also changing over time. So you wouldn't be able to do 1:1 anyway. So at the most, you could probably do something where you're kind of chasing the downside, where kind of, let's say, in a really bad market, the bottom end of your range might end up with 10 Ethereum, for example. So you would try to do a 10x leverage 1 ETH position on, say, whatever, Binance or Bybit or whatever, right? And with 10x, and you do a 10x levs on it so that you could kind of be hedged against that.
So you will hedge at the maximum one-sided ETH position in shorts.
Yeah, but so my problem with that, actually, here's my learning, right? My problem with that is that my problem with that is that it gets expensive. Because so firstly, you're still paying the fees, right? Because that's like the fees to the exchange doesn't go away just because the price is not moving. So you're still paying those fees. And then secondly, if the market goes in the opposite direction, you're gonna get crushed by your own short. Like if the market actually goes up, right? Because again, it's not as if your ETH in your LP is getting bigger, because you're actually reducing your ETH position as the market is going up. So you see how it's not a perfect solution. So I kind of gave up on it because I couldn't get the math to work out. And various combinations were ending up in this situation. I just end up spending a little bit more money, right? So I don't know what the correct solution for it is. It's possible that I just didn't math it enough. There's a group called Gamma Swap Labs, I think, that is trying to do some work in this particular focus area. Basically, how do you hedge the position on an LP farm? I don't know how far they've gotten on it, but I was kind of keeping track of what they were doing to see if that was something that kind of they'd figured out like how to crack. But as far as I can tell, they couldn't do it for concentrated liquidity. They could only do it for the original V. Is it called V1? Yeah, the broad one, which is not really the problem that you want to be solving. I think the concentrated liquidity one is the one you really want to be focusing on, but it's so much harder to solve that one, I would say. So yeah, to be perfectly frank, I could not find a great way to hedge it, at least not directly. So what I ended up doing was I would hedge it indirectly by buying other stuff, right? Like PaxG, or just holding more USDC elsewhere. It's not a perfect hedge, but at least it kind of protects you from the downside somewhat. Yeah, so that's it. Like, I wish I could, kind of give you something that was a little bit more actionable, but I feel like it kind of really depends on your own position. Maybe you'll find a version of this is a little that, kind of is a good balance between not so costly, because there are fees if you keep a leverage position open long enough. And then at the same time, also protects you from the opposite. Because like, if you're just short Sol, it's going to be really painful if the market actually starts flying in the wrong direction, right? If it goes up, then you're actually in trouble because your LP is not going to protect you from that.
Yeah, your LP is quickly transforming to USDC.
Correct.
And
right.
you are printing fees
it's the wrong
Sol.
Yeah.
It's the wrong asset. Yeah. So you're printing fees in Sol. and you're paying higher and higher funding rates, or the
Right.
the perp fee,
Right.
and your
Right.
short position is now losing money,
Right.
and you have to cover that. So when you have to cover it, you're probably have to go out and buy SOL at this new increased price to cover your short. And
Right.
unfortunately, you're probably using USDC from your LP position if you just don't want to spend any more money. So it's kind of like, yeah, it's great when you type it in words, like, oh, if you're an LP, you should just hedge and just tweet it, and
Right.
people will be like, oh,
Yeah.
you're so smart. But when it gets
Right.
down to it, you need some sophisticated algorithms to really kind of run
Yes.
this in an effective way.
Yeah.
So Gamma I also heard about Gamma. We're actually also kind of experimenting in this area right now, and I believe we might have something that actually dynamically changes the short amount, as well as taking into consideration the size of the short and the funding rate and the LP fees and impermanent loss. Those are the four main variables that you need to take into account into an equation that should work. So mathematically it works. We're testing it right now in real world conditions. It's a hedged LP strategy. Yeah, it's like pretty excited about it. I think it's the first of its kind on Solana. I haven't looked at Ethereum heavily enough. But that's something that we've been working on for a long time with Meteora. So decided to maybe give you a test once we have the strategy out and have you take a look at it.
Yeah. No, I mean, sure, man. Because I think we've basically both articulated the biggest problem with LP farming, right? I mean, you are opening yourself up very willingly to the same volatility risk as basically anyone who's just holding Solana or whatever, except you are also kind of nailing yourself to the wall with a particular range that you're doing. So there's always that that's the riskiest part. And if you could figure out a way to hedge that, even if it's not a perfect, it doesn't even have to be 100%, right? It can be like you're just reducing the risks to some degree. And then at the same time, I'm sure there's some costs involved. So I guess the question is, once it's been thoroughly hedged or de-risked, is there any gains left? I guess that's the biggest question at the end of the day, right? Because I mean, if you completely de-risk it, then actually your position is entirely static. You can't actually make any money from it, I suppose.
Yeah. So in this case, I guess all of us are counting that the LP fees are going to be bigger than impermanent loss, and that majority of impermanent loss is hedged away.
Right.
And also, when the market's going down, there's going to be a large amount of shorts as well.
Yes.
So,
right.
That's also the unfortunate bit. What happened, I guess, this weekend is a bit more than just the usual market situation, where these shorts, they are being closed prematurely while the longs are being liquidated, because the exchanges are incurring this thing called bad debt, essentially. They're worried about losing money, and they're closing these longs while liquidating these longs and not having enough shorts to liquidate them. So that's also something that we have been talking about internally, where we're like, okay, if something like this happens again, we cannot depend on the hedge. The hedge is not always a hedge. It could break apart. It could not fully hedge our position based on the math. And with these kind of algorithm strategies, if you're not sure, you can't run it at size. If you're not certain about it, you cannot run it at size. Like if we're playing with 100K, right, the most that we would lose, say we lose like $6,000, $10,000. Okay, we can pay the client from our own fees, our own treasury, our own VC funds or something. But if we're doing a $10 million fund, it's going to be much harder. So the math has to check out, and in every edge case. And I think that's like what makes it hard. And I think, the future of LPing that we see it, I think that you would agree, based on like what you've experienced, is it seems like automation is the normal next step, but no one has really taken that leap. And So far, I
Yeah.
think like people with a strong sense will outperform automation today with a strong sense.
Yeah.
You know, they
Yeah.
understand what's going on, the math to a certain degree.
Yeah.
They can get more information from Twitter, from the markets,
Yeah.
related assets. They've also remember
Yeah.
the last couple cycles, like, you know, you've been in crypto for a long time.
Right.
You would outperform
Yeah.
just a simple algorithm that's just maybe rebalancing whenever, right? So that's what
Yeah.
we see Camino's doing, Arrakis, a lot of these other kind of platforms. So there needs to be something more sophisticated for this to move forward.
Yeah. Yeah. You know, so
Yeah.
one thing I forgot to mention was I also did try a lot of so I used Beefy Finance for a good like
Oh
6 months or so. Yeah, so I
How was
did
that?
try full automation also. It just was, I mean, as you said, it did not perform as well as, you know, kind of if I were the one kind of making the choices. Because if you're, in case you're not familiar with how Beefy works, that rebalance it happens all the time, right? Like they rebalance, I think, like 4 times a day. Like it makes these kind of very minor little changes in the
Wow.
ranges that it covers. And it socializes it across all of the people that are kind of in that same liquidity pool with you. So the fees are not so terrible because you're all kind of sharing it. But because of that, because it's kind of, you know, I'll just put this in quotes, like a dumb algorithm that'll just keep doing that, there is some efficiency that is lost. And then I think additionally, it always tries to err on the conservative side, right? Which is, I guess, maybe that's fine. But yeah, so you don't really get to optimize. And then finally, the thing that kind of was the worst part of the experience for me was it auto compounds your earnings, which does not seem like it's a bad thing, right? That sounds intuitively, you think, it's like, okay, yeah, I'd like to auto compound my earnings. But the problem with that is that if the market were going down, you're compounding it back into something that is becoming worth less and less. So actually, what you should be doing is you should be extracting those daily revenues, turning them into USDC, and not letting it auto compound, right? But I guess there was not enough. Maybe they couldn't figure out how to do that, or maybe I guess that's too much of a human decision, I suppose. So that's not how the Beefy algorithm is written. So I eventually, after doing that for 6 months, I went back to just kind of manually doing it myself. But I learned enough from watching the Beefy algorithm at work to realize that, you know, it was not actually all that bad to rebalance, you know, kind of in a very small kind of thing. Like it was just plus or minus 1% in either direction, just to kind of, you know, make sure that you were still okay. That's not terrible. As long as, you know, you're kind of doing it at size. If you're doing it with small amounts, then the gas fees are eventually just going to eat you up. There's not much point doing it, right? So anyway, yeah. So I learned a little bit from watching Beefy at work, but like bottom line, I had to go back to kind of just doing it myself, and hope for the best. Which is, again, I don't know, man. Like that's the state of the art right now. Still human decision making. So I'd love it if you guys let me take a peek at what you guys are doing later on when you're ready, whenever you're ready. I'd love to test it out with, you know, well, ideally when the market has recovered, because I'm not sure I can move what I've got right now.
Yeah. I'm not very liquid right now, is what people like to say.
Yeah, a little.
My position's tied up. No, that makes sense. It's just cool that you know, just taking a step back is, you know, I find a lot of people on Twitter just like talking about different things, essentially, oh, airdrop incoming for XYZ, and that's totally fine, right? But, you know, you're one of the few people I feel like goes out and says, okay, let me just try this thing. Let me actually give you the numbers. Because you just got KOL saying like, yo, just buy this, and like how I made $3,985 per 2 weeks. It's really refreshing, and I really appreciate you kind of giving the honest take, as well as kind of being very transparent and also just doing the work. And I think too few people like click deposit and look at it and put it in do you put it in like an Excel sheet or something just to keep track of everything? Did I lose you? Hello, hello, Luis. Did I lose you? Test, test.
I'm not sure if it's I'm not sure if it's me or you. I can still see your video though, so hopefully this is kind of has it recovered? Are we back online?
I think
Can you
we're
see me?
okay. Yeah, I can see you.
Okay, cool. Yeah. So
One, two,
anyway,
three.
yeah, I
Go,
did
go.
hear. I heard what you said though. Thanks for that. I think so. My main philosophy for this stuff is I'm not going to talk about anything that I didn't try myself, and I did not like put my own money into. Um, I'm not a fan of learning vicariously. I need to do it myself. I need to learn it experientially.
Yeah.
Now, granted, I'm also very lucky in the sense that I do have some resources to play around with. But I guess
Yeah.
the main thing I always have to remember is that the people who are reading my stuff or following me on whatever Facebook or Twitter or whatever, they might have much smaller resources to work with. So there's a certain responsibility to not just give them stupid crap that you've not tried, right? Because you are going to burn these people whether you like it or not, and that's not why I'm in this industry, right? The reason why I'm here is because I wanted to give Filipinos specifically access to better financial services. So I gotta be sure that I'm actually that the services that I'm talking about are actually better, because it's not always the case, right?
Yeah.
So
Yeah, that's true. I was in Manila. I went to Cebu. I went to
oh, cool.
like a couple other places, just kind of as a tourist. And I also got a lot of.
Mhm.
I grew up in Vancouver, Canada, so like half my
Oh,
friends are
okay.
Filipino.
Oh, nice.
And I was completely. I was a victim of the Instagram algorithm of go to Philippines and check out the beach, and so I was convinced by the algorithms to go for vacation, and I've gone quite a few times now. I'm curious as to kind of, I know this is a little bit more on the LP side of things, but I wanted to touch up on this just as a personal interest, is like, where is adoption right now in the Philippines? Because I think you have a unique perspective on that. And where is that going? Is this like a big area of growth that maybe us as like a I guess we're like a DeFi company that we should be focusing our time on? Can you tell us a little bit about that and what's happening there?
Yeah. I mean, okay. So typically, depending on kind of what your perspective is, right? Like, the Philippines is like has always been like a growing market for cryptocurrencies. The difference, though, between us and many other countries is that we're not necessarily a country of builders or developers, right? We're a country of users, and those users that we have, they tend to be kind of kind of small wallet kind of users, right? You're not going to see tons of money. It's not like Singapore, right? I think Singapore is kind of leading the world in terms of like dollars per crypto wallet or something like that. The Philippines is not like that. We have lots and lots of people, but they don't necessarily have a ton of money in their wallet balances. So knowing that and understanding that, what kind of products do you offer, right? The reason why things like Axie Infinity, the whole Web3 gaming thing did so well here in the Philippines was because it allowed people to take something that they had, which was really just their time and attention, and turn it into cryptocurrency, which was kind of the reason why it became so popular. We had a lot of time and attention. And remember, this was like the middle of the pandemic, right? So a lot of people were just kind of stuck at home doing nothing anyway. So yeah, it really took off here. What things would not do well here in the Philippines? Well, anything where the initial upfront capital or the capital outlay is substantial, that probably wouldn't fly here because it's overwhelming, it's intimidating, and most importantly, people just don't have that kind of money to bet. So when I talk about things like LPing, actually my main question in my mind, the biggest debate internally was, is this even something that the average Filipino can do? because like if my philosophy is that you need at least like $500 US in your portfolio before you start playing around with this stuff. How many people actually have $500 in their portfolio? I wasn't really sure, right? But I gave it a shot anyway. It seems like there are people, like based on the feedback I've been getting, there are at least a handful of people out there who really appreciate the diary thing that I was doing, because it at least helped them scope the opportunity in their own minds. And I guess that's the main thing that's always kind of, I always have to have that in mind, right? Are the opportunities you're presenting even appropriate for this particular market? It needs to be quite low end, like the entry point needs to be very affordable if you want to do well here. And that's kind of why, very unfortunately, things like meme coin trading is so big here, because it feels like the ticket price is so low, but like, yeah, I mean, well, you know what that looks like, right? It's like in practice, it's not wonderful. The output is not wonderful.
Yeah. I mean, it's a slot machine, so, and every slot pull is only a few cents. You just have to pull a lot of times.
Right. Yeah.
That is very interesting. The fact that you mentioned that this kind of geographical area is like a nation of users is still very enticing for most of like consumer crypto builders, because we're building for the less banked. We're building for to be able to bring financial awareness, knowledge to kind of people who aren't in the sophisticated markets in London, Singapore, New York, Shanghai, Hong Kong, and such. So it does seem like there's an opportunity there. It's just like the Ponzi-nomics have kind of made it, I guess it's kind of created this one direction. I, for one, want to go in a different direction. In particular, I think this LPing thing has been, I guess, like you said, it's a little bit deleveraged. It's a bit less risk. It doesn't require you to click buttons and farm all day. But still, there's losses, right? If I can make it so that maybe the gains are not as high, but the losses are effectively neutralized, then I can package this into something that an everyday person could use it as kind of a very high interest savings account, lending or giving liquidity to people who are the real gamblers. Then maybe there's something to be had here. Basically, I think that's the crypto game right now. Like, they're giving resources and tools to the risk-on people, so the risk-off people can make money, but also be able to take advantage of this whole system that we're making.
So I really like the way you said that. I think that really makes sense. So one of the reasons why I got into LP farming was because I was actually reacting to this thing that someone said like a couple years ago, where he was saying that the only crypto product that has ever really shown product market fit are the exchanges. And I'm like, okay, that's a little bit of a cynical way to think about it, but okay, fine. I will agree that there's definitely product market fit when it comes to the crypto exchange business model. So if that is the case, what can I do as a individual who is not an investor or an angel or a seed investor or whatever? What can I do to participate in that one product that has found product market fit? And I guess LP farming was somewhat of a way to do that. With it, short of me just buying the token of like Arrow or Jupiter or whatever, right? I mean, if I wanted to participate a little bit more directly, LP farming was the way to do it. So I still believe that is the correct way to do it. I think that whatever you guys end up building to kind of make the risk a little bit more palatable, and maybe I guess the thing that I would find very useful is if it just kind of smoothed out the yield, such that kind of, because like as I was saying, right, of the 10 weeks that I've been doing this in Orca, I've only actually been up maybe about 8.5 weeks, right? Because there was downtime because I had slipped out of range and I refused to kind of adjust my position accordingly. And so because of that, it wasn't actually a full 10 weeks. So yeah, so when I do the math in my head, I know that I could have actually made a little bit more money from it if I, if the price ranges had been more in my favor. So kind of like if there are tools that allow us to kind of smooth that out so that it was a little bit more consistent, right? It doesn't have to be 1% per week. I mean, honestly, that almost sounds like a scam. Like if I told a traditional person that I could make his money grow by 1% a week, he's just gonna laugh at me and call me a scammer, right? That feels unreasonably high. But that is it's definitely possible. It's just that, it honestly, dude, it doesn't have to be like that. I mean, anything in the 20% per annum range, you're beating the market by a fairly large amount. So
Yeah. That's also the case with how we're positioning when we come out with this product, is like, how do we make it so to the average person it doesn't seem like a scam? That's like part of the marketing thing, because there's
right.
a lot of things are just too good to be true, and you also have to dial it back too. I think we're coming off of time here. Really appreciate your time, Luis, for chatting with me.
Yeah.
And I'm really excited to kind of carry the conversations a bit forward, and maybe check in on you in a few months or so, once the markets had a chance to settle down. And do you have any final words for our audience here on what you think?
Yeah, sure. Yeah. So I mean, I think that like this was a very depressing weekend for a lot of people, but I don't think the year is up yet for us. I think the bull market is still here. I think the one thing that I'll probably do as a slightly more cautious investor, I will probably dial back my expectations for what the ceiling might be for the bull market. I think the reason I would say that is because you can't liquidate this many people and expect them all to come back, right? There are some people who are just going to exit on because of this, and some of them might not have a choice, right? It might be you might have like really blown them up. So I think that there will still be all-time highs, but I think that the ceiling on that might need to be kind of reduced, at least in terms of our own expected value out of it. But I do think that the rest of this year is still going to be pretty good for us. I guess that this was a weird way to kind of start October. Not so October now.
Yeah.
But
October,
I mean, yeah. But I mean, it's like that's the crypto life. Sometimes it just doesn't do what you want it to do. It's our job to kind of keep going and manage our own personal risk enough so that we can keep playing, right? And that's it. Sometimes patience and perseverance is the two main things that you need. That's it.
Okay, awesome. Appreciate your time, man. I guess on the last bit, I'm obligated to say this, is if you end up trying Meteora, the competitor to Orca, please message me. I'll be happy to give you access to our kind of analytics tool. Sure. It's kind of like a metrics finance, but for Meteora. Meteora is a bit more customizable when it comes to the curves, when it comes to how you want to shape your liquidity, and setting one-sided different things. So if you want to give that a shot, try out our tool, UltraLP. It's still in beta. So if anyone in the audience wants to try out UltraLP to better manage their positions, have real-time P&L, let me know. Just shoot me a DM and I'm happy to give you access. It.
I mean, I once the market has recovered to at least the price point that I was kind of aiming for, I will ping you about this. I might need you to, I don't know, just spend like 15 minutes with me, just kind of helping me understand the difference between DLMM and CLMM, because like I only really know the concentrated liquidity version, and I was looking at the Meteora like listings, and I was like, oh, there's a lot more stuff here than I am used to. So I wasn't quite sure kind of what all the different buckets were for. So maybe we could turn that into a live stream, right? Where you kind of just talk through the differences. Yeah,
cool. Absolutely. Let's find time for that. Always ping me. I'm always available. Are you in Philippines right now?
I am in Manila right now. I'm going to take a quick vacation this coming week, but hopefully the market will be back by the time I'm back here, right? That would be wonderful if that was the case.
Yeah, touch grass, come back home, and everything's all green. That would be
Yeah.
awesome. Okay. Appreciate your time,
That would
man.
be great.
I'll talk to you
That
soon.
would be great. All right.
Great.
Cheers.
Bye for now.
See ya.
Cheers.